Welcome to Alpha Recap, your aftermarket rundown from stockalpha.ai. Great to have you with us. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone, glad you tuned in. We're digging into a pretty headline-driven session that wrapped up after the close.
So let's jump right in. The tape was all about risk being repriced, and a pretty clear rotation between sectors.
Right. To put numbers on it, markets closed with the S&P down about 0.5%. The tech-heavy Nasdaq finished the day down roughly 1.3%, and small caps lost about 0.8%.
Yep, modest weakness on the headline index, sharper pain in the Nasdaq, and small caps also gave back ground. Classic tug of war.
So, what really stands out here is the rotation. Money moved out of richly valued growth names and into commodity-linked cyclical sectors.
Exactly. Energy and materials led the winners. There was a reported oil supply shock, outages, logistical snags, and lower than expected inventories in some regions. And that pushed crude higher and energy stocks noticeably up.
Materials and miners also rallied after deal and exploration headlines picked up. Traders liked the resource story today.
On the flip side, communication services and technology were the biggest laggards. Headlines suggesting threats against major U.S. tech targets put pressure on chipmakers and big consumer tech names.
I mean, when you step back and look at this, geopolitics plus an energy shock is a textbook catalyst for rotation.
Which brings us to the drivers. First, geopolitical headlines. Reports tied to threats, apparently from Iran, against large tech targets, triggered a quick risk-off in rate-sensitive, high-valuation parts of the market.
Second, energy supply concerns tightened expectations and lifted oil, and that was the principal reason energy outperformed the rest of the market.
And third, crypto operational risk. A security incident in the Drift protocol created volatility for crypto-adjacent equities and some fintech names, adding another layer to the sentiment mix.
Right. And the other thing is the macro backdrop. The market still priced a higher-for-longer Fed path than a year ago, so commodity-driven inflation moves can meaningfully change risk premia.
That interplay, sticky inflation concerns plus higher energy, is why traders were quick to favor cyclicals when oil ticked up.
Quick reaction segment.
That was a big tech hit.
Energy really stole the show.
Let's walk through some notable movers. Big tech names like Nvidia and Apple were among the larger drags on the Nasdaq after those geopolitical headlines. Traders reassessed supply chain and demand risk for those names.
At the same time, major energy companies, think the big integrated names and some independents, outperformed amid the oil move. Materials names like the big miners picked up momentum on deal chatter and exploration updates.
Healthcare had pockets of strength too, following regulatory approvals and company-specific wins, although the sector wasn't uniformly strong because policy noise kept some names in check.
Select utilities and grid-related plays also reacted to policy developments on grid upgrades, nuclear and solar permitting. Mixed results, but notable for infrastructure watchers.
A few corporate updates and filings crossed the tape today. A bunch of 8K filings and company-specific news. Most of those moves were idiosyncratic, but they fed into the broader sector narratives we just described.
Yeah, that tracks.
Okay, let's make this accessible. When we say rotation, we mean that investors pulled money out of the stocks that looked most sensitive to headlines, long-duration growth names, and redeployed into stocks that tend to benefit from higher commodity prices, like energy and miners.
And why did that happen so quickly? Because the combination of geopolitics and an energy supply shock changes two things at once: perceived risk to future cash flows for tech, and near-term profit expectations for commodity producers.
Another way to say it, tech gets punished because it's valued on future growth that a geopolitical shock could dent, while energy gets rewarded because higher oil can lift next quarter cash flow pretty directly.
Let's talk about breadth and technicals. The pattern was sector-led divergence. Market leadership narrowed to energy and materials, while growth leadership weakened. That tightened breadth, and often precedes either consolidation or a bigger risk-off leg if headlines persist.
Traders will be watching whether the S&P can hold recent support, and whether the Nasdaq can reestablish a technical foothold. Continued underperformance by the Nasdaq relative to the S&P would confirm the rotation out of growth.
On the macro calendar, there were no big surprises today. but the market stayed sensitive to upcoming inflation prints and Fed speak. Rising energy prices can nudge headline inflation, which complicates the Fed's choices.
Analysts noted that if commodities stay elevated, headline CPI could get a temporary lift, and that would entrench a hawkish tone. So the market is watching inventory reports and oil data closely.
Quick reaction segment.
Volatility is back.
More headline sensitivity.
On crypto, the Drift protocol hack rattled some exchanges and custody providers and spilled into crypto-linked equities. That reinforced the risk-off impulse for certain fintech names.
Honestly, I was a bit surprised by how quickly that rippled into listed equities. Operational risks in crypto are still very real and can cause contagion in related stocks.
The Nike search buzz made a cameo in retail chatter today. Not market-defining, but a reminder that consumer trends and search data still get attention.
Right. Now, a few practical takeaways for listeners. Information only, not advice. Analysts noted 3 big themes to watch tomorrow: geopolitical headlines and any clarification there, oil and inventory reports that could shape energy leadership, and the usual macro prints and Fed comments that will influence policy expectations.
Rotation was the day's main story. Cyclicals and commodity names outperformed. Growth lagged. Expect headline-sensitive intraday swings and the potential for continuing sector rotation if these forces persist.
Risk management is important here. Position sizing and watching technical supports matter because leadership can flip fast when headlines hit.
Investment disclaimer. This segment was for informational purposes only. We did not recommend buying, selling, or holding any security. Analysts note that data suggests increased volatility, not investment instructions.
Bottom line, Tuesday's tape was dominated by a rotation triggered by geopolitical headlines and an energy supply shock. The S&P closed down about 0.5%. The Nasdaq finished down roughly 1.3%, and small caps were down about 0.8%.
Keep an eye on geopolitics, oil and inventory reports, Fed commentary, and any follow-on from the Drift incident. Those were the key catalysts the market reacted to today.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for joining Alpha Recap. We'll see you after the next close with more highlights and context. Take care and trade thoughtfully.